Hello there, welcome back to lesson 5. Today's topic, we're going to look at market structure. This is actually our first stepping stone um, to understanding what happens in the Forex market, despite what happens in the back door, all the things that we have been looking in the past weeks. So I advise you to pay close attention to what we are going to learn in this from today's topic and the other coming topics, because that's the most important part that you need to pay attention to. Because if you miss any piece of what I'm going to teach you in these lessons, um, it's going to be hard for you to put the puzzle together. So yeah, I hope you have a pen and paper to write down whatever we're going to discuss today. And this is the most interesting part. So today's topic, as I've said, it's market structure. Market structure is simply what is happening on the market, like what is the behavior of the market, how does the market move, what you see when you open the charts, that you're going to see a number of structures. So what I'm actually trying to do is to actually give you a picture of um, tell you the language that when you open your charts you're going to um, understand, because the market is going to behave in different ways and you need to always know what is happening, always have a picture of what's the next move, what's happening, and all that. So having said that, I'm sure you're ready with your pen, and let's get started. So before I get here, let's get to know what is a candlestick, or what is a candle, what is a forex candle. Um, if a candlestick is simply a price representation of what's happening in the market. Maybe I would say simply it's a symbol. Right, so it's a symbol that represents price action over time. So this candle is actually measured against time. Okay, price against time. So normally this candle will look like this, and a candle will have a body, which is this, and a candle will have a wick. This is, some people call it a head, and it'll have a tail. Okay, something like this. So uh, this is this is a body. This is, yeah, but that's a tail. So every candle is going to have a body, a tail, and a head. And then you're going to meet some candles that will look like this, have a small body, and maybe a small head and a very big tail. You're going to meet different candles telling you different things. You're going to have even a candle that'll be like that. Have something like very long and very long. Okay, you're going to meet all these candles, and you're also gonna have something like this, some candles like that, like that. All these candles, they're actually telling you what is happening in the forex market. So every candle has an open and has a close, right? Has an open and has a close. So I'll take it from here, right? Let's say this candle has finished, has opened, has open and has closed. Now we want to look at how the next candle form. So if this candle is, let's say these candles that are simply represented in these colors, um, these might not be the actual colors, but normally you would see that if you're talking about a bullish candle, a candle that is oops, sorry. This. Okay, let's say, okay, this candle, right, is actually green, right? So normally we have a green candle and a red candle. A red candle, it's normally represented as something that is going down, like price is going down, and a green candle, it means that price is going up. So let's say we'll start from here. Let's say we have this candle, right? And let me pick something. Okay, 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 fine. Okay, so this is actually the open, I mean the close, and I'm having difficulties with my pointers, and this is actually this is actually the open, this is actually the close. If a candle is red, that means it has actually opened here and it has actually closed here. Okay, which means, let's say this one is also what, green. It's actually telling you that this candle opened here and it closed here. If this candle, if this one is red, it's telling you, if this one is red, it's telling you that this red candle opened at the bottom, I mean at the top, and closed at the bottom. And then how do you know that this candle open at the bottom, this candle open at the bottom? That's when you use colors, right? If you're going to, of almost every trading platform is going to have these colors. If the color of that candle is red, just know that it has opened at the top and it has closed at the bottom, okay? Just like that. And then what are these things? Wicks. What are these things called wicks? This is actually a head and a tail. So both of them, this and this, it's called a wick. A wick, um, the wick, you know, right? Not something like wick. Yeah. So it's called a wick, and these things, right? I'm talking about these things. What you're seeing ahead here, these are called wicks. Yeah, those are called wicks. But though are called wicks, the top one is called the head, the bottom one is called the tail, just like what I've done here. Okay, so if you see that a candle has a wick, what it's telling you is that price went there only once, right? Like price went there only once. Like you can see, this is actually telling you price went there only once. If this price had come, if price had come here twice, like has repeated these numbers, you would see that this body, right, would end, would close somewhere like here, right? Not, yeah, would close somewhere like there and there, right? If this candle, if this price, if price had gone up here like twice or three times, you would see that that candle would be closing somewhere like there. Why? Because price was repeated. But if price was not repeated in that sense, which means um oops, yeah, if price was not repeated, it will only give you a week, right? A week. So I hope that makes sense. And let's move forward on the charts. I want to show you what are these candles. So let's do this. Let's do this. Where should I take you guys? Okay, here. Share. Yeah, great. So let's see what is happening here. What I was telling you, what you're seeing here are candles. So let's come here. Okay, fine. Have you seen the candles, right? I'm pretty sure you can see them. And every candle is actually, you're seeing different candles, right? Seeing this candle, like what I was telling you, that sometimes you would meet, um, just a minute. Yeah, okay, fine. This. So you see, you meet some candles that will have a small head. Some candles will not even have a head. This one is has a small head. If you can see, some candles have a small wick. What is actually telling you is that price only came here once, did not repeat during this time, right? Like just during this period. So remember, we said price is a symbol. I mean, a candlestick is a symbol representation of price against time. So price is what you're seeing here. These are actually prices. And then time is what you're seeing down here, right? So, and remember we talked about, I'm not sure if we talked about time frames, but I can't remember if we talked about time frames, but yeah, we will talk about them. Don't worry. So if you choose, let's say, this is a 4 hour time frame. As you can see, this is a 4 hour, which is also a year, right? 4 hours, right? Every 4 hours, a candle is forming, right? Every 4 hours, a candle is forming. Every 4 hours, a candle is forming. And you can even choose like to look at different time frames. Actually, I'll explain better about time frames, but don't for now, don't bother, don't worry, but I'll explain about time frames. But yeah, so when you choose that, let's say I want to look at a 4 hour time frame, and then that means that every candle you see on that chart is actually a 4 hour, right? This is a chart, all this thing, what you're seeing here is the chart. Sometimes people call it a market. Yeah, so um, in this case, what is telling you, remember, I said if this lead candle, if this candle is lead, it means it actually opened here and then it went up only once and then it started coming down, right? And then it came up to this level. As it came to this level, it went up and it never came back. That's where it closed. So this is actually the open. This is actually the close, right? So as soon as it closed, it opened another candle. Which one? This is this one, right? Why am I saying it opened here? Because it's a blue candle. So normally blue candles, they're actually representing that the market is bullish. So if the market is bullish, that means that if that candle is saying the market is bullish, it means that it has an open at the bottom and it has a close at the top. So it actually opened here, and as soon as it opened here, it never go down. It only start going up, right? It only started going up. You see that? So it actually went up to this level, and then it came back, right? It came back down here. Because it came back here, it never came back here. I mean, never came back up here again. Why? Because it has, we said, whenever you see a week, it actually telling you that price did not repeat. Like what I'm saying when I say repeat is like this and then going again, right? That's repeating price, like, you know. So all this is actually telling you that price did not repeat and price did not repeat. Price did not repeat. I think I've made myself clear on that one. So whenever you see something like this small candle, right? This candle, this abnormal candle, it's simply telling you that all the 4 hours, price was just repeating in this zone. It wasn't going up. I mean, it went up once and it went up once. It never went back again. And the same thing, it's actually telling you that price has been repeating in these levels for 4 hours, right? So these are actually candlesticks. So they tell you what the market is doing based on price. So it's a symbol representation of price over um, over time. Okay, again, it's time over time. So I'm actually going to send you a book. It's called the Trading Bible. This book has actually explained these candles, and I would advise you to read that candle. I mean, to read that book. It's actually the first part of the book. It's called the Bible, the Trading Bible, the Bible candlestick. You read that book, you understand better about these candles, and then we'll come back on the charts, continue. Um, we'll come back on the chat and continue with our lessons. So I've talked about candles. Now let's go back on our drawing board. Where is our drawing board? Where is our drawing board? Can't see my drawing board again. Where is the drawing board? So, I'm pretty sure you guys have understood about that. If you have any question, please keep that question, and we're gonna going to answer it, or ask me more questions in the in our private group, and I will reply to you. But yeah, so I want us to move on because we needed to understand the candlestick first. So now let's move on, right? So whenever you open your charts, you're going to see a lot of time frames. I mean, a lot of candles, just depending on what time you've set to see whatever is happening. So remember, I'm going to talk about the time frames as I go along. But uh, so the thing is, if you understand what a candlestick is all about, what a candlestick does, it's not a very big thing, but it's just you understanding it in a way that it's a symbol that it is representing price over time, right? Don't get caught up, say, the candlestick, when the candlestick is like this is gonna happen. A candlestick is like this is gonna happen. No? Because you're going to hear a lot of things from different materials about candlestick and all that. So we're not trading candlesticks here. We're going to trade price. That is why I've mentioned price in the definition, right? That is why I've mentioned price, price action. Yeah, so price action are going to use the candles because they actually represent price action. So now let's move forward to what brings us here. So today we're here to talk about uh, market structure, right? Which is so not remember, but you should know that the market price moves has a number of moves, and one of them is what we call a bullish structure. So a bullish structure is the market whereby the market goes up. I want to use a better color, green one. A bullish market is whereby the market goes up, and okay, before I get there, I just want to also make something clear that in Forex, the market does not just move like this, right? It does not just move like this. It moves in waves, right? It actually moves in waves. If it's going up, it's going to move in waves like this. Or if it's going down, it's going to move in waves like that, right? Or if it doesn't want to go anywhere, it's going to move like this. Okay, so market moves in ways, doesn't just go like this or doesn't go like that. It does not do that. It moves in waves. So a bullish structure. What is a bullish structure? A bullish structure is whereby when price does this, what I'm trying to say is that all the candles, right? Like in this case, all the candles when all the candles form, they're going to give you something that is going to look like things, So assume there are a lot of candles here, candles, there are a lot of candles, like a lot of candles. Okay, so a lot of candles, like more candles, more candles, more candles, will actually give you something that looks like it's going up or it's going down. So when you have this kind of thing whereby the market looks like Okay, so in this case, whereby you have candles going up and then the market is going to go down, the market is going to go up again, the market is going to go down, the market is going to go up. So if you see that the market is actually moving in this way, whereby it's actually coming down and it's actually going up, just know that this is a bullish structure. Okay, just know that this is a bullish structure. Why? Because it's actually giving you a direction that's pushing to the upside, right? This, but it's actually giving you the direction that it's moving to the upside. This is actually telling you that price is going up, right? Why? Because the structure is bullish. So remember, we talked about bullish is whereby the market is going up, it's going long, and in this case, you're only advised to start to be buying in places like this. You buy the market in places like this. Why? Because the market is going up. Okay, this is actually what is a bullish structure. So another thing that you need to also understand is so yeah, I think this is clear. Another thing that you need to understand is a bullish structure, a bearish structure, I mean. So a bearish structure will be something that moves like this. It's gonna go down and go up and go down and go up and go down, right? Yeah, it might also come down up here and go down again. Okay, yeah. So in this case, you would know that this is a bearish structure. Why? Because price is actually pushing to the downside, right? Price is actually pushing to the downside. And then where do you buy? I mean, where do you sell? If price is pushing to the downside, you sell um, here, you sell here, you sell here, and then you sell here. Okay, these are actually chances where you can actually take, these are actually places where you can actually maximize in the forex market, taking opportunities whether to buy or sell. So here you buy, and then yeah, and then you can also sell here. Another position is like here, yeah. So you can be selling in these areas, buying in these areas. So this is actually what is called a bullish structure. This one is a bullish structure. Why? Because it's actually going up. This is actually called a bearish structure. Why? Because it's going down. So the last one is a lunging structure. A lunging structure is something that does not go up or does not go down, right? It just stays in, just creates a sideways movement whereby the market is going to go up um, and then come down, and then oops, what's happening? Go up, come down, go up, come down. Okay, you can see that this market is actually not going up, it's actually not going down, and this thing is what is called a lunging structure. Why? Because it's not going up, it's not going down. So for now, we're not going to actually talk about this one because we're not interested. I mean, in most cases, we're only interested in buying in areas where we're going to maximize our profits, we're going to make money. But sometimes you can also sell here and buy here. You can sell here, you can buy here, right? You can sell here, you can buy here. Okay, so this is actually a ranging structure, a bullish structure, and this is a bearish structure. So the question should be, can I not sell in these areas on a bullish structure? Can I not sell? The question is, in the first place, yes, you can sell in these structures. The same thing, can I not buy in these structures? Right? The question should be yes, you can buy. But what you should know is that even though you are buying, right? Even though you're let's say here, even though you're selling, right? In on this level, you're not going to hold your trade for too long. Why? Because anytime the market is going to continue going up, simply because the market is in a bullish momentum. It's in a bullish structure. It's actually going up, right? So it's like doing the opposite when people are busy. People are busy selling their mins at an expensive price, and then you're busy buying at an expensive price, so that you should sell with some time, right? Maybe that's the last price. So you don't have to do the opposite of what other people are doing. If you can do, if you can sell here, it's okay. But I'll not advise you to do that unless you have actually reached a certain state, a certain level of understanding what you're doing. Otherwise, you're not supposed to be selling in a bullish momentum. Let me also put it here. Only buy in, okay, or in a bullish structure. Only buy in a bullish structure and never sell. Okay, this is actually going to help you. Never buy. I mean, never sell in a bullish structure. And then only sell in bearish structure. Okay, never buy. And then another thing, do not buy or sell in a ranging structure. These are my advices, the key things to note, right? Do not buy or sell in a ranging market. Why? I've said that, you see, the movements are very small. So we're not interested in taking buys or sells in places where the movement is not actually satisfying or big or small. So that's why I'm saying do not buy or sell. We're going to go deep and understand why I should not sell and why I should not buy in some areas. Okay, so I want to show you what these things look like on a forex market. Okay, so let's pay attention to that. Okay. All right, so this is it. Just wait a bit because it's tripping. All right. So just wait because this thing is tripping so much. Yeah, but I've just opened my forex chart, and you're actually seeing something that's very familiar to what I've just talked right now. Oh, come on. This thing is not responding. Come. Sorry for that, guys. It looks like my computer is actually tripping and my network is not stable. So we're going to end this lesson here. Hopefully the next lesson, we're going to look at the structure to see what actually happens on the forex market, to see these things on the forex market. But I would advise you to open your forex charts, just go and see what I've actually been telling you. You're going to see the same things happening as you're waiting for the second lesson. Otherwise, I wish you a very good day. a very good night. Let's meet in the next one.